Hey, hey, everybody! What's going on? How y'all doing? How's the audio coming in? Who do we got in this thing? Hey, Brandon Medina, man, we're always 1 minute late. That's how it goes. Hey, Alex, my man, how's that audio? Cool, cool, cool. All right, well, let's get this thing started. Tim, how you doing?
I'm
Everything
excellent,
good?
man. I'm excellent.
Hey, thank you for doing this, man. I really, really appreciate it.
You got it, brother. I'm honored that you even asked me.
Ah, of course, man. I've actually, my guys have been bugging me to actually have you do this forever. And I'm like, well, he's a busy guy. I don't want to just be bothering him. And finally, when we were talking about me coming to Vegas, I was like, all right, perfect time. This is Tim. Tim Weintraut. He lives in Las Vegas. He's actually he's one of my students from what's it, boot camp number 1 or boot camp number 2?
Very first boot camp.
The very, very first boot camp. So before I really probably even knew anything about teaching, he put up with me. And so we started those boot camps probably about, I don't even know, 2 years ago. Maybe a little bit more than that. We've gone.
It's almost been 3 years, man.
Yeah,
3 years.
we're on boot camp 16. So Tim was in boot camp 1 when we had. I was just trying to figure out like how to even teach people. Like I knew everything that I needed to know about trading and to teach, but the system of developing people was just totally off. We just had basically 16 classes, and then that was it. We had no community or market recaps or simulator or anything, and we were using those Google groups, and but we kept expounding on it forever. And Tim, it was a really, really good student because every boot camp I did, so it could be like boot camp number 10, and so it's a year and a half later, I could be doing a webinar on intraday setups or anything, and I would see Tim just creeping up in there, still in there taking notes and asking questions. And by this time, Tim had already become a full-time trader, and he was making money and doing great, and he still was coming in, doing his homework and checking out all the new material and refreshing himself. He never stopped learning, even when it was material that he's seen before. And I thought that was really cool, and it really showed just how much hustle he had, because a lot of people don't have that. There is a lot of perspiration in this beyond just taking a class. So, Tim, why don't you give everybody a little bit of background on yourself? Guys, I apologize for my voice. I went to the amusement park on Sunday, and I rode 27 roller coasters. It was just butt-ass empty, and I kept going like just back to back to back. And so I went to Cedar Point, and they got this ride called the Millennium Force. And it's so scary, and I'm really scared of heights. And I went on it 7 times in a row. I was like in near tears every single time. And so I lost my voice. But Tim, why don't you give everybody a little bit of background on just a little bit about you, but also how you got into trading and about your style.
Okay, so I'm an old man, so I bought my first stock when I was 20 years old, and it was Black & Decker at the time, right when they had bought a company called DeWalt. And I bought it with, I took $1,000. One of my customers happened to be a stockbroker, and back in the day, and if you wanted to buy a stock, you had to have a stockbroker. There was no online trading. So I bought Black & Decker, and he's told me at the time that that was the worst stock to buy. It was like $16 a share, and a month later it was $30 a share. And from that point forward, I became addicted to the stock market. So, one of the things that I really like to try and do, and I started out as an investor, not a trader. As a matter of fact, when I started watching you, and you were buying and selling stocks that you knew absolutely nothing about, I was blown away, because I spent hundreds and thousands of hours studying stocks and balance sheets and products and management, and to see a guy just buy a stock. I watched you trade a stock one time. You added to it like 4 times as the thing was running up, and then you turned around and shorted it on the way down. I don't know how much you made that day, but I'm sure it was a pretty significant day. And then you turn around and ask the room, does anybody know what that company does? I was like, you got to be kidding me, man. But so I knew there was a whole nother side of stock market and investing and trading that I had to learn, because it is my passion. I love the market. I love finding turnaround stories and stocks that I can buy and hold for the long term. I mean, I've had some amazing, amazing wins buying and holding stocks for the long haul. But what I do differently now is, for example, I bought Marvel Enterprises, which had just come out of bankruptcy, the comic book company, for $1 a share. Disney eventually bought them for $55 a share. So, I love finding those opportunities. But what I used to do is I used to hold stocks as they were making their climb. I used to hold them through the ups and the downs. And the ups, I mean, they stair step up, but I'll hold them until we get a nice takeoff, and then I'll sell a good chunk of my position and wait for that pullback, and then load back up again. So
do it.
Go ahead.
That's the way to do it. You make money on all sides.
Right. Learning the technicals of it, which was something that I had no understanding. Matter of fact, I didn't even believe in it. I just thought it was kind of like voodoo or something like that. I really didn't think that it was something that you could actually use. But now I am completely sold. I mean, I understand it, and I owe that all to you, actually. So
let me ask you this. Can you tell me a little bit? So I go on your blog almost every day and watch those videos and stuff like that. Give me an idea on your current style of trading. Like, you mix a little bit of what I do with the day trading, but you've totally adapted it to your own style of also swing trading. Give us a juice of what you trade these days, and how all that comes about.
Okay, so primarily what I'm looking for is I'm looking to try and align the fundamentals with the technicals. So, for example, I was just telling you earlier, I had a swing position in Vimicro, and if anybody played that today, it had one heck of a move today. So, Vimicro had come out, and so I will stress this right off the bat. If I'm swinging a stock, I will not swing a stock unless I know something about the company. I have to know something about the fundamentals. I have to know something about the company, or I don't feel comfortable swinging. So, Vimicro had just had a great earnings report. The stock actually went down the day of the earnings report, but it was a good earnings report, potential turnaround story, so I took it because the technicals actually looked really good, and I took it for a swing. So, but then, as I do my videos and I do my scans and I get to familiarize myself with these stocks and their charts, as soon as I start to see a move, I already know where I want to enter if I want to take it for a day trade. And if I see it start to go, I mean, I'm in it not only for a swing, but I'll take it for a day trade as well. So I'll make a little money in my day trading account, and then I'll make a killing in my swing account.
Sure. Give everybody your blog. So where's your blog? Where can they find you?
It's that's a good question. I don't know the name of my blog. I think it's VegasTraderBlogspot.com.
Yeah.
Actually, I'll throw it in the chat room real quick. As soon as I
and so, what do you do on your blog? See, I know you do a daily video, and then.
No, I only do the videos on the weekend. I was doing them every day. You know, look, man. You know, for me, you know, my day starts. I'm on the West Coast, so you know, you guys got it nice because you can get up at 9 o'clock in the morning and you know trade stocks. I'm up at 4 a.m. I go through all my scans. I go through all the pre-market stuff. I listen to the Benzinga pre-market show in the morning before the market starts. And, you know, I set up all my stocks that I want to watch for the day. I've got 1, 2, 3, 4, 5 different charts. And then I've got my TC2000, which is set up with 3 different time frames. And, you know, after the day is over, you know, then I'm going through my scans for the day for potentials for the following day. Plus, I'm going through all the post-market activity. So, you know, doing the video every single day was too much. I've got a bunch of other stuff going on too besides stocks, but stocks take up a lot of my time. What's that?
So, Tim, tell us about, you know, what were you doing before you started trading? What was your story? So I know you were working. Was it an awning company or a construction company? I believe when I first met you. And then give me the progression of kind of what went down.
Well, yeah. So I was the general manager of a construction company, and you know, the bottom line was my passion was trading. So you know, this Twitter stuff, you know, kind of got me. And like I said, there was a few people that I started following on Twitter. You being one of them, and you know, I watched your trades, and I was blown away. Then I joined the chat room, and you know, I think I did what everybody tries to do, which is like, okay, I'll just join the chat room, and I'll just follow this guy into his trades,
and
I'll make a killer. You know,
I'm too good. I'm too fast.
Well, what I learned was, you know what your trade is. You have your plan set up. So it's almost impossible if you're day trading to try and follow somebody into their trade when you don't know what their plan is. And if you don't have one yourself, how can you know what your risk-reward ratio is? How can you know where to place your stop or what your first target is if you don't have a plan? So
very true.
So that was the thing that I learned in the chat room, which then led me to taking the boot camp. And then after the boot camp, or you know, I think I took it 9 times actually. And you know, I had some struggles, man. I mean, you know, the technicals was a difficult thing at first for me to get, but you know, now, I mean, it's just like, I mean, I used to watch you go through those charts and go, man, how does he go through them so fast? I used to spend literally hours going through my scans, you know, and trying to make a setup out of what I was seeing instead of just seeing the setup and going, okay, that one's on my list. Now, I mean, I go through my scans, I'll do it in a half an hour, you know.
A lot of people do that. They stare at the chart so that they can find, because they like the stock and they want to be in it or they want it to go up, so they force their bias on the chart. So they sit there and stare at it, and they add in more indicators, and they draw more lines. Because if you know, like, think about something like trend lines. Trend lines are like so ambiguous. You can draw a trend line this way, then that way, then you could connect two triangles. You could connect them on a 6-month time frame and over the last 10 days. So you could have 30 trend lines on a chart. And so no matter what chart you look at, you can give me any chart, and I will show you a spot where it's going to break out right now. You can just draw some piece of crap line on it and be like, boom, trend line break. And so that's why people stare at charts so much, and they really, really focus in trying to find something and force their bias on there, when in reality the best trades are going to be the ones that are clean and they're crisp, and you can spot them right away, because when they look like that, they act more predictable. They act more predictable, and so they end up moving cleaner. And most people don't realize, like, it takes just 1 second to know if the chart is good or bad. Not even 1 second. You should take less than 1 second once you get going.
Well, see, and that's true for, you know, when you're looking for day trades. The thing that with me, and the reason why my videos, if you ever do watch them, are so long, is because, you know, I'm kind of looking for a mix of things where I'm looking for the day trade setups, and then I'm also looking for the swing setups. The stocks that I want to start nibbling on, even though they may not be really crisp and clean right now, they're heading that direction. You know, the candles are starting to tighten up. You know, or they're sitting right on top of a 200-day moving average, and it's really holding well as support. You know, you've got a nice trend line, and it's volume starting to pick up. You've got some nice accumulation bars for volume. You can see that it's being accumulated. You know, that's a swing stock. That's a swing setup. And, you know, sometimes I'll start dipping in those for my swing position. And I'll give you 2 examples of swings that I took this week in 2 very different looking charts, 2 very different reasons. One is NADL, which is offshore drilling rig company that's got a big contract with Russia, and because of all the sanctions that are going on with Russia right now, that stock's been getting pounded. Well, you know, it's out of its lower Bollinger Band, and I think it's going to be, I like the long-term story there, so I started nibbling, building my swing position for a potential snapback. And then on the flip side of that, I took Nokia, started building a swing there, because it is getting ready to break a multiple-year resistance. So, I mean, 2 very different styles.
Sure. Hey, let me ask you this, because I go through this a lot with the people, my own students, and people are always asking me, it's a tough one, how you know when you're ready. Because you were working, you were in Las Vegas, you know, being general manager of that company. What do you have to do or prove to yourself to know when you're ready to be a full-time trader and you can do this for a living and your sole source of income? I mean, what are some of the steps or things that you need to see?
Look, I think the first thing is that you've got to be disciplined. You've got to know that you're gonna, if you know, one of the things about being an investor that makes it challenging mentally is, you know, when you're an investor in a stock, when a stock falls, you know, you add. You can add to your position. If you really believe in the long-term fundamental story, you can add to your position. And when you're day trading, and, you know, the stock drops below your 10 cents, you know, mental stop, and you go, oh, you know what, I'm just going to hold on to it and see if it comes back. And then the next thing you know, it's down 20 cents, and then it's down 30 cents, and then you're like, okay, well, I'll just hold it until tomorrow, you know? And, you turn a day trade into a swing trade, and that's not what it was meant to be. It was meant to be a day trade. So I had to feel comfortable that I was disciplined enough to stick to my game plan.
Sure.
Then I had to make sure that I had consistent results. I mean, they're two very, very different styles, and for me, one of the challenges for me was aligning things up on multiple time frames. If you're not familiar with that type of stuff, it takes a little bit to get used to it, but so I had to work through that. I mean, when I started out, I took your first course. I took every course after that. Doing some swings and some day trades at work, but it was very difficult to do day trades. But, got to a point where I felt as though I knew what I was doing. I had a consistent routine. I could recognize things. I was disciplined. I'm not afraid to take a loss. When you're an investor, sometimes you're stubborn. You just don't want to take a loss. When you're a day trader, look, you're going to have losses. The key is to limit those losses to very small, and when you've got profits, take them, man. Take some of them.
Did you have like certain financial goals that you needed to hit? Like, I need to save up some money, or I need to make X amount of money before I do this? Or were you just kind of like, fuck it, I'm all in, pants down, all in right now?
I was, financially I was in a very good position, so that really wasn't the goal. The goal was, can I make, consistent income? And it doesn't have to be, to me, it didn't have to be, I'm not trying to be a billionaire. I just want to make a consistent income and do what I love. And that's what I'm doing now.
Okay. And did you find, let me ask you this, because I had this trouble. In the beginning when you went full-time trading, did you notice any nervousness or drop-off in your trading because you didn't have the backdrop of your job? I know when I quit my job and started trading full-time, I thought I was going to make like $1 million that year, because I was like, wow, I'm making like $1,000 a day, and I got a job. So if I don't have a job, I'm going to make $10,000 a day because I could sit there and focus all day. And as soon as I left my job and started trading full-time, my results that first 6 months were like, and then they came back up, and then they crashed again. They came back up, and it was like this hot mess for 6 months. And I don't know if it was because I didn't have a job as my backdrop or because my routine changed. It took a lot of getting used to. But I did notice a lot of that herky-jerky of you don't have a job, things change. And I talked to a lot of traders, and they told me kind of the same story of like, when you have to force yourself, force the market, where you like, this trade has to go well, or the market has to do well for me to pay my bills or whatever, then you lose the best advantage that you have as a short-term trader and a small trader, which is to be opportunistic, to wait on the sidelines and like a sniper, waiting for your moment and going for the kill. That's the best part about being somebody that's not moving millions of dollars around. You can pick and choose that perfect moment and then, boom, get in. But when you force it, when you have to make the money, that next mortgage payment or that next car payment, yet that next trade has to work or that market has to go up, you're totally screwed because you're not in that position of strength anymore. You're at the hands of the market, which is always going to be unpredictable.
So, that's one of the things, because I get hit up a lot, from the blog and from Twitter. I get hit up a lot of people saying, hey, I'm going to quit my job. I'm going to start trading, full time. And I'll ask them, we'll say, okay, well, do you have, 6 months of reserves so that you're not feeling that pressure and that stress of, taking care of the family and paying the mortgage and doing all that stuff, because it's going to force you to take trades that you probably shouldn't take. And yes, to answer your question, my results, even though I wasn't feeling the financial pressure, I mean, something happens. I mean, you think you got it. It's like you'll have 10 days of like, oh my, I'm on fire, and then all of a sudden, you can't hit a trade right for nothing. It's like, everything you take is like goes against you, and you got to be able to come back from that. You got to be mentally strong enough to say, and financially comfortable that, okay, yeah, this is I took a hit, but I'm still in the game. I can come back from this. And if you don't have a tremendous amount of pressure with, paying the mortgage and this other stuff that's out there, if you're comfortable, you'll be able to do it a lot easier, I think.
I think so too. I think when your back's against the wall, the average person, 99.9% of people, the trading is so much mental. 99.99% of people just can't do it. You will see a story every blue moon of somebody that was really down on their luck and they clawed their way out of it and became this awesome success story. And that does happen. But those people, I mean, you're talking about, real superstars. We all can't count on being that every day. It's super hard. And it happens even to the best of us. When Mary Beth had her wedding, we had our wedding Memorial Day. I mean, that wedding cost us 75, 80 grand. And so we were sitting there like, she's 26, 27 years old. She's paying for it on her own. She's got to go and make this money. And, she's so smart. She's done the calculations. If my wedding is 80 grand, I need to make 160 grand trading to pay for it. And so that she's got that number in her brain, and she's very good at getting $1,000, $2,000. But with taxes and commissions, well, guess what? Even at $1,000 a day, it's gonna take a long time to build up. And so she started really, really pushing, and she got really hot, and she would be up $2,000, $3,000, and then give it all back. And then someday she'd be up $4,000 or $5,000. And then she'd give it back because she had this big number in her head. And she's like, I got to get this because my mom wants to have all her friends come. And, she just had this beautiful, we had the wedding on the beach in Florida. It was a beautiful wedding. She wanted a beach wedding. She's from Mississippi. She wanted in Florida. She wanted an amazing wedding. And, we're like, we're going to do this. We got to do this. You only get married 1 to 2 to 3 times. So you got to do it. And it really forced us, for a couple weeks, we both, she's my little sister. We both were forcing it a little bit because we had this huge number in our head. And so, we made the decision for her those 3 weeks before the wedding, she stops trading. Because there was just no point. And me being the older one, and I've been doing this a long time, I said, well, I'll do the trading. You run the business. Let me focus on trading and making some money, and you focus on running the business, because it's not going to work if we're both sitting there forcing trades because we've got this big number in the back of our mind. It happens to everybody.
Yeah, I couldn't agree more. Look, one of the other things too that, I don't know how you're going to feel about this, but one of the things that I stress to anybody that's starting out as a beginner trader is, using margin. Look, man, if you don't have the skill set, if you don't have consistent returns with your trades, I think using margin and leveraging up. But I trade with my own money. I very rarely will ever use margin. I'll use margin. If I short a stock, you got to do it on margin. But I won't to go long a stock. I'm using my own cash. I am not leveraging up to go long. I could probably do it now, but to me, it just adds more pressure to the trade. I feel more comfortable when it's just my cash. And I think I manage it better when it's just my cash. I don't know. I think
How
You know, it's
much
like
cash? How much cash are you trading with in your day trade account versus your swing trade account?
in my day trading account, I'm trading with roughly 40 grand. So,
Okay.
and then in my, my swing account, it's over 100. So,
How much do you think somebody needs? I know it's so dependent on skill level, but a lot of people ask, uh, how much do you think somebody needs safely in their account to really, make a decent living at this, $100,000 type income?
I think, my thought is you got to have at least 25K. I mean, that's kind of my thinking. I mean, if you've got 4 grand, or 5 grand, I'm not saying you can't do it with 4 or 5 grand, but I'm saying what you should do is probably take that 4 or 5 grand and build it to 25 grand over time, and then you can go ahead and get more aggressive, and maybe you can start dabbling with the margin and doing the other stuff. But I think you really got, I mean, you got the pattern day trading rule. You got to have 25K, and I know that the prop firms help get them around that. But to me, just starting out, if you've got 4 grand, you use your money and you build that account until you've got 25 grand, and then I think you're in a pretty good position for day trading.
It's really, really tricky because I see so many people. Like, I get emails all the time. I had a lady email me last week, and she's like, I got like 600, $700. What should I do? I want to do this. I need to make some money and do this for a living. I said, take some classes at your community college. Educate yourself in some manner. And then I send her the links and stuff. I said, in the meantime, don't give up on your dream. If trading is your passion, then don't let the fact that you have only $500 keep you away from your passion. But don't go and take that money and try to force some income out of it. Invest in yourself. In the meantime, if this is your passion, practice trade. You can email me. I'll send you some books. I'll send you whatever you need, out of resources, and you educate yourself. And every month, save $200 or $300, and come back to me in a year and ask me the same question. And I'm going to ask if you did all your homework and all of that stuff, and we'll go from there, because people are always in such a rush. But if you're in your 20s or 30s or even 40s, you could potentially be doing this for 40, 50 years.
Absolutely.
Don't go and rush the process because you only have $1,000 and you got to force yourself some income. Learn. And it doesn't mean you got to. I told her, I said, I don't think you should take my boot camp right now, because where you are financially and all of that, it's going to put too much pressure, because you're going to spend $3,000 on a class, and then as soon as the class is done, you're going to be really excited to trade and all of that type of stuff, and it's just going to put you in a weird hole or debt, which you don't want to do. So I sent her our 4-day class. I just sent her the recordings, and I said, take this class. It's 14 hours of material. Email me back with some questions, and just practice. Read. Talk to as many traders as you can. All of those things are free, and then come back in a year and see where you are. But in the meantime, there's so many different ways you can save money to start building up your account, but you need that capital.
I think one of the things that, I mean, because I get the same thing. I get some people, I got $300-400, and I got, I tell them, look, I mean, day trading is not the deal. If you got a $500 account, you're not going to start day trading. Okay, you're going to get eaten up in commissions, and that's just not going to happen. So, look, I suggest, look, find a company that you really love, a good company. It may not be a company that's going to move up, 30-40% in a day, but, like MGM or some company that invest in the company. Learn how to start investing. I mean, so many people, they've never even bought a stock before, but all of a sudden they think, the stock market is where they're going to make their millions because they see other guys doing it on Twitter. It's not easy, man. This is not an easy game in any way, shape, or form. And, the education part of it, I can't tell you how bad I wish I could have taken a boot camp class when I was in my 20s. Because, you know, I mean, I've read a boatload of books, and that's all good stuff, but I'll tell you right now, the thing that was a big difference for me, was a turning point for me, was taking that boot camp course. Did I lose you, man? What are you typing?
Oh yeah, these guys are all just typing all the stuff on prop firms and stuff like that. Prop firms, guys, is tricky business sometimes because a lot of them aren't based in America. Something's not based in America, things get a little bit tricky. So when we, like when Tim took the first boot camp, we used to all go through a company called TM Global. And TM Global was based in the Bahamas, but to get around pattern day trade rule and stuff like that, that was the only place, you know, there was no laws against it at that time. You know, people could be in the Bahamas and stuff like that. You know, that was kind of the only options you could do. And then, you know, things get a little bit weird in the prop industry. Things change, you know, very quickly. And when I finally got sick of using all these different firms, that's when we started ClickFund, which is my hedge fund, where we house our traders, and we allocate them capital and tools and stuff like that, and education too, and they can trade in there. And you know, and I found that was really the only thing that we could do. It's so tricky sometimes to use these prop firms because, you know, they'll give you, you know, you put in $2,000 and they'll give you 50-to-1 leverage, and boom, you lose it in one trade. And it's like, that's not how it goes. You know, my guys, some of them, I only let them trade 200 shares at a time, you know, or 300 shares till they prove themselves. And I say, all right, you're going to trade 300 shares at a time, no margin, you know, maybe you can use 10,000 in buying power, 15,000, but, you know, something small. And then as they're profitable every 2 weeks, then I allocate them more capital and let them use a little bit more buying power. But if you can't trade 100 shares without emotions, you can't trade 1,000. You know, you'll just go nuts.
No, you know, that was one of the things that I learned too on my journey is, you know, position sizing is you know, when I first started out, and you guys are probably going to laugh at this, but throughout that year and a half where I was really kind of just training myself on how to do this, I was trading 100-share lots, and I didn't really care if I made money or not in the trade. I just wanted to see that I could execute the trade properly, or that the setup that I tried to play would go. I mean, I'd take, you know, $15 on a trade, and that, you know, after commission and taxes, what did I make? I made like $2. But that wasn't the point. The point was getting used to buying and selling, buying and selling, buying and selling. I wasn't used to that ever before.
Yeah, true. So give these guys some advice. If you're a new trader and you know you're going through some of the pitfalls, you know, I'm sure like you had them. I was going through some of your emails when you're sending me some charts and how you were having trouble with the technical analysis stuff. How do you kind of get past all that load that happens in the beginning? Like, how do you muscle through that? Because I noticed that's where people seem to trip up is, you know, you take a class or whatever, or you start trading, or you're learning, and then you just get hit with all this information and you freeze for a while. You're overwhelmed, and that's where people start falling apart.
Well, you know, you're right. It is information overload. There's so much stuff to look at, and there's so many different styles of trade. I mean, you know, so many different indicators, R2, R3, S. I mean, I was like, and every time Bollinger Bands, moving averages, you know, volume, stochastics, MACD. I mean, everybody uses all these different indicators, so you're just constantly being bombarded by information. You know, you got to work through it all and just find that system that works for you. And then, even then, you know, because the markets are so dynamic, you know, you start playing nothing but. I clearly do much better with playing breakouts and day trades. That's my thing. So if you're playing, you know, if you're in a market where you know, gap up days typically suck for me. You know, the gap up days are tough days for me because, you know, the stocks gap up, and then I try to play a breakout, and the breakout fails. You know, and one of the things, huh?
Always happens to me too.
Yeah, I mean, so you know, you've got to kind of. I think the most difficult thing is recognizing that not every setup is going to work, no matter how clean it looks. Not every setup is going to work. You're going to have to take a loss. And look, nothing sucks more than taking a small loss and then having the thing turn around and shoot up like a rocket. I mean, your timing is just off a little bit. But you know, there was a time when I would sit there and say, ah, man, I screwed up, and I beat myself up for the next 2 hours because I took a loss on a trade that took off. Well, now, today that I've progressed, I have no problem selling a stock, taking a loss, keeping an eye on it, and if it breaks now, I have no problem jumping back in. Whereas before, I was really gun-shy to even jump back into a stock. But, you know, if the first time fails, and it looks like it's going to go again, and it breaks, and it's got some volume, I have no problem jumping back in and going for the second round or a third round.
Some of my biggest trading days I've ever had in my career, I've only hit 50% of my trades that day. Because you try a stock, you know it's got the look, but you always got to manage your risk, and you know it's got the look. And these big momentum stocks like SCOC, DGLY, JRJC, whatever is in play, the range on them could be like 100%. So for the day. So if your entry's wrong even a little bit, you could lose 10, 20%. So you got to be okay with taking small losses so that when you finally nail the entry, that inflection point, you get that monster run, but it's with really, really limited risk. And so you can be in a nice size. And so sometimes you may test it out and you take a loss of 10 cents and it's like, all right, there's $200 down the drain. And then, you know, you may take a test again, and maybe you lose again. But when you finally get it, and you get that right spot, that's when you can really make the huge money. And then you're going to make $2,000, $3,000 on the trade. That, you know, losing a couple $100 is not that big of a deal.
Right. But, you know, it takes a while to get there, man. It takes a while to be comfortable and take the losses. You know, it really, to stick to your plan. And that's what I try to, you know, I try to tell everybody, if you're going to take a trade, you have to know what your risk-reward ratio is. I mean, you've got to know where your stop is. And I don't set hard stops. A lot of times I use mental stops, and that in the beginning that was a challenge for me because I would hit my mental stop and I'd say, you know what, I'm going to give it a couple more cents, and then I'm going to give it a couple more cents, and now I don't do that. I mean, if it hits my stop, I'm out. And then I have no problem watching it to see if I can jump back in.
Got to do it. You got to do it.
Got to do it, man.
How do you size your position? So give me an idea of how you're sizing them. Are you sizing your trades just strictly based on risk, or do you have a process that goes into really nailing these down? Because I think that what a lot of people do, I see it in my hedge fund all the time, is the students, they get lazy sometimes. I'm not talking about the beginning ones. So the beginning ones are always on the 100, 200, 300 share limits. But once they're profitable, I release the limits. You know, they could trade whatever they want. And the more experienced traders, even sometimes they get in the rut, and, you know, I'm always barking at them. I always go through the list so I can see who's being lazy. So I'll be like, Jim, what the fuck? Or Bob, what the fuck? Like, every single trade you do, you buy 1,000 shares. It could be a $50 stock or a $5 stock. You're buying 1,000 shares. That is impossible to manage your risk. You're not doing any risk management if you're just buying 1,000 shares every time.
No. So, you know, look, you know, and you know, I tend to trade a lot of the lower dollar stocks. I like, you know, those are where you can get 20, 30, 40, 50% moves in a very short period of time. You know, and those for those stocks, I mean, and it depends. I mean, a lot goes into my thought processes. If it's a China company, you know, that has a history of popping and flopping, you know, I'm not going to load up with 10,000 shares of that thing. I'm going to take maybe 1,000 shares, maybe two. You know, I'll take 1,000 shares, and if it goes and then it keeps, you know, it builds a nice flag and looks like it's going to break again, maybe I'll add another 1,000 shares. You know, if it's a $40 stock, you know, I'm not going to go take 1,000 shares of a $40 stock. I'm going to take, you know, 100, 200 shares. You know, FireEye. I just took FireEye as a swing at 28.81 a couple of weeks ago, and you know, I took, I think, what, 400 shares of FireEye, and then I sold half of the shares on the run up and held them for the pullback, and then added back, you know, another 100 shares. So, I mean, it's for me, it all depends on what's the stock, how well do I know it, you know, what's the news, what is it a fluff piece, or is it something substantial, you know? I mean, if it's material, if it's a great earnings report, that's material news, man. That's, you know, if it's a company that just reported its second quarter of profitability and it didn't have profitability for the last 10 quarters, then, you know, that's a big news event, and odds are it's going to have some legs to the run, as opposed to, you know, some fluff piece about how they might build something someday somewhere and it might be worth $100 million, you know? Or they might find oil in this you know, reserve that they just bought. I mean, it just really depends. There's a lot of different things that go into my planning.
So, guys, how I size my positions, I use two different things. One is a risk-based system. So rather than a fixed system of buying 1,000 shares or $10,000 worth, I use it by risk. So the smaller the risk on the trade, so that means what I mean by risk is the spot from my entry to my stop loss is my risk. So 10 cents, 20 cents, $1, $2, whatever it is, that's your risk on the trade. And so the smaller the risk, the more shares you can buy, essentially, is how, you know, you do it. So for me, like, say I wanted to risk max $500 on a trade. Then if my stop loss is 10 cents away, I can have 5,000 shares. But if my stop loss is $1 away,
oh yeah,
then I can only have 500 shares. You know, so you're totally spreading it around based on your risk. Then I have the second tier of things, which takes a little bit more experience, like Tim was talking about, where you got to kind of know the stock. So my second tier of sizing goes in that I have statistics, and all traders that day trade like me, that take a lot of trades, like tens of thousands of trades in a year, they have to have good statistics, because when you trade that much, you need to know where to point your energies. If you trade only 100 times a month, then you have an idea, like you're trading one or two or three things, and you kind of have these things that you do. When you're making thousands of trades, you need hard data to back up everything you do. And so what I have is data on everything, from how I trade in the morning to the afternoon, how I trade flag breakouts to base breakouts, how I trade stocks that have good earnings versus bad earnings, how I trade PR plays, all of that type of stuff. And I have statistics on all that. So there are certain trades that maybe I trade with a 75% probability, a win rate. And then there are other trades that I have actually that I only get 40% probability. So I size my position according to probability based on evidence, and then, of course, how much risk I have on the trade. And that allows me to go in. So there might be some trades that I'm all in on. And what I mean by all in is I have a max daily stop loss of what I'm willing to lose per day before I just stop trading. There are certain types of setups with certain risk parameters. I may risk my whole day's worth of trades because that's my setup. And then there are other setups I say, okay, I'm only going to risk $300 or $400 because I don't trade it that well, and I don't have exactly everything I want. And so you've got to make adjustments. But that's kind of the next level stuff of you have to know when to go balls deep. You got to know when to do that. Otherwise, you're in for a little bit of pain.
I agree.
Hey Tim, where are you going to be taking me when I get to Las Vegas in 2 weeks?
I'll take you wherever you want to go, man.
How long have you been dating this lady, Eva, right?
Ava,
Ava.
Ava, and we've been together for over 2 years now.
Okay, so this could be your girl. This is like your go-to girl.
She just moved in, man. So yeah, it's pretty serious.
Oh boy, so we're gonna have a nice family dinner, and then you guys are going out of town.
She's going out of town. I'm not going out of town. You're stuck with me. I'm actually going to go to the event.
Okay, cool.
Yeah.
We'll get a couple. Let's try to get a couple days trading. I'm gonna trade while I'm down there. I can't. I get the itch.
Okay.
I don't like days off.
I know that there's some people in there that probably want to see what my setup looks like.
Let's do it.
Yeah, so let's just show them what the setup looks like real quick. So I've got two screens, and one of them is I got a 45-inch screen and I got a 26-inch screen. I know you traded off like a laptop, which is great for you, but for the old guys that don't have really good eyesight,
I got a desktop. I got a desktop when I'm at home.
All right, so this is my setup. This is what I'm looking at throughout the day, and this is one of the screens, and this is my TC2000 here, up in the top left corner with the 3 time frames that I like to watch. I like to watch the daily, I like to watch the 30-minute and the 5-minute. On the daily, I've got all the moving averages, the 20, 50, 200, EMA, and SMA, because people have a tendency to watch different moving averages, right? And those all do present resistance and support areas. So that's what I have on there. And then on the 5-minute, I've got the VWAP and 9 EMA, and down in the left-hand corner of the screen, I've got a go-to list, which I've built over time of stocks that are lower dollar stocks, and I rank them in percentage. So you see the 43%, 35%, 35. So as a stock is climbing throughout the day, my screen is blank.
Yeah, we can see it.
You can see it? Okay.
Dave Hebert's Canadian. He's always got problems. Right, Dave?
So as as I see stocks start to move throughout the day, their percentage is climbing. I'll pull them up in my TC2000 and take a look at the charts and see if I like it or if there's a place for entry, and then I may start following them. On my other screen, I've got basically all charts set up, and typically what I do first thing in the morning, like right now, this right here is pre and post market action, and pre-market I'll be watching this and seeing what's moving. Like right now, post market AKS is on my radar. I actually already own AKS as a swing, but I think it could be in play tomorrow. There was some, the CEO just bought 75,000 shares, or the CFO just bought 75,000 shares, and the CEO bought 50,000 shares. And I think AK Steel has made a nice turn. It was definitely a stock that's been beaten up over years, and I think it's probably just beginning its run. So AK Steel will be one that I'll be watching tomorrow. But as the morning, like I said, I watch the pre and post market action. Um, and then I've got trade ideas. I don't know if you guys are familiar with that, but this one is 3-day breakouts on high relative volume. And then during the trading day, there's another strategy that I use, which is
Oh man, your
bullish
trading is
stocks.
different than mine. I gotta update mine. I'm using the one from like 3 years ago. I never updated.
Yeah, I'll use bullish stocks under 20 moving up fast. So, as I see things crossing here, I pull them up in TC2000 and take a look at the time frames. And then I'm also running scanners all day long, of stocks that are moving greater than 4%, which is something I actually learned in Kanal's course. So I'll just bust through those throughout the day too and see if I can see anything that looks like it's setting up on multiple time frames.
Hey Timmy, do you ever short stocks?
You know what? I didn't for a long time because I had this it's anti-American type thing going on.
Oh boy, you're one of those guys.
I never really liked the whole shorting thing, but in all actuality, oddly enough, El Pollo Loco, which is a West Coast
It's
restaurant,
hard, isn't it?
yeah, I couldn't wait until they did their IPO. I mean, I had it marked on my calendar for the day that they went public because I love the food, love the, and I thought the IPO would do well, which it did.
Yeah.
And it did incredibly well, but then it got crazy, and I'm like, there is no way this thing's gonna keep running. So I actually took my first short on El Pollo Loco when it hit like $41, and I made a good clip on the downside. So it was pretty fun. Look, I get it. I get playing both sides, the short and the long thing, but I prefer to play to the long side. But we've been in a bull market for so long. I mean, we've gotten spoiled, and at some point, being a long-sided trader only is going to be a tough game when we get a pullback, which I think
Me
will
too.
come.
When we did your boot camp, there was no short setups in the whole boot camp. I would tell everybody, well, if you want to short something, just flip the chart upside down. Because I personally didn't really short much, and then we had the boot camp, and then we had some of those things like the Euro crisis, and where we had just momentarily quick 1 month dips in the market. But in that time, I was trying to learn how to short it. A good friend of mine, John Welsh Trades, his actual name is Daniel Mardorf. I don't know why he calls himself John Welsh Trades. He's a fantastic shorter, so I used to always bug him on Twitter, how do you do this? How do you do that? And he used to always give me these tips, and there's some other guys on Twitter, Investors Live, Lincoln List. So I'd always hit them up on GChat, yo, what do I do with this? And they're so nice. These are really good traders, but they're super nice guys. They'd always answer me back, hey, wait for it to rip here, rip there. And so I think while it might have been boot camp 9 or 10, then I really, really got into it, and it was so fun. I had this new toy, and because for years I was just going long. But when stocks drop, they drop so fast. And they just drop so fast. There's so much money to be made there, at least when you're day trading, especially those really big parabolic type stocks that, it's nuts. You got to, there's money in it if you can figure out how to do it. And it took me a while, but it literally is, sometimes you just turn the chart upside down. It's kind of like that. But, yeah, I didn't do it till, we were really more than halfway through all these boot camps. You just have to, I guess, get used to it. And then I had a lot of fun because it's you're really slaughtering these stocks, and it's this weird kind of sadistic type of fun because all these people are stuck in it, and here you are just raining fire, and it's
You know what was really important for me, or the thing that I took away from the experience of shorting was it was weird to sit and watch a stock because normally I'm afraid to walk away from the computer because the stock might drop. But then I was afraid to walk away from the computer because the stock might go up. So what was funny is I was watching, El Pollo Loco on the 5-minute chart. I mean, actually, like pre-market, I held part of my short position overnight, and pre-market, the thing was gapping up a little bit, and I'm like, oh man, should I sell? Well, so I could just see me from the long side going, oh yeah, my stock's getting ready to rip, and as soon as the market opened, it started falling, and it kept falling, and I'm sitting there watching it, and I'm watching the chart as if I was looking to take a position to go long, and there were so many times where I would see the thing, it start to spike a little bit, and that probably would have been the point where I would have taken my long position, and it was just going up to the VWAP, and it would fail. I mean, I could see where I would be taking it as a long, and it would fail every time. And it was a short. I mean, it stayed underneath the VWAP the whole day. There was never a reason to take that thing long.
That's how they go. When they finally flush. It just takes a couple tries. MBLY, GoPro. I mean, there's been a lot of these like really big momentum IPO stocks, man. They just don't crack till. When they crack, then they can drop $10 in just days, and it's worth it. But sometimes you got to take a little bit of risk and maybe you might have to take a small loss or two. That's part of shorting. I noticed that now that I'm shorting, probably half my trades are shorts, give or take the market conditions, which makes sense. But my win percentage is a little bit lower on shorts than longs because maybe because it's newer, but I'm tighter with my risk because the squeezes can be so hard. Like today, we shorted Sino. So, we shorted Sino, SINO. I originally shorted at 438. I shorted 438 today, and then it squeezed up, and I had to stop at like 451. And like an idiot, though, I pulled my stop a little bit. I covered at 449 for a 10-cent loss because I didn't want to get stuck in this breakout because it could have broken out and then it would have ran another $1. But then, 5 minutes later, it cracks back down, and I finally get the breakdown mark I want, and it drops from 440 to 350 in an hour, half an hour. It's like you make 25% in just a hot second.
Buddy, quiet.
Hey, Tim, let me ask you this. What is your favorite setup? What's the setup that you do the most?
My favorite setup is probably a flag breakout. I mean that's my favorite setup. I every once in a while like snapback, rubber band snapback plays. Those can be really great trades if you catch them right. I don't do as many of those as just symmetrical triangle breakouts, flag breakouts. Those are my sweet spot.
So walk me through like a flag breakout. How do you find that sucker, and then what are you looking for as that stock is flagging to finally tell you it's go time? Big Tim is getting in this thing.
So what I'm looking at is, primarily the 5-minute is actually the 5-minute and the 30-minute are the two that I'm really zoned in on. And if you get a nice pop, right off the morning, like, lately what I've been doing a lot of is, I try not to trade anything for the first 15 or 20 minutes from the open. I usually just try to. I've got 5 or 6 stocks that I found different PRs on through Yahoo In Play, or maybe I heard about it on Benzinga's pre-market show, or maybe even saw it on Twitter from somebody. But I'll have 5 or 6 stocks that I'm watching for the open, and then, if they're gapping up or if they have a powerful move off the open, I'll sit and wait for some type of a flag to develop.
Okay.
As soon as I see, probably 2 or 3 bars and I see some fairly good support, I'll take the trade. Is I might be a little bit early at times, anticipation, but what I'm looking for though is the volume. If the volume really starts to come, if it pulls back on that lower, you have a good volume pop off the open, and it pulls back on that lower volume, you get that nice, to an area of support. It's like, man, I'll tag that sucker as soon as I start to see volume coming back in.
Okay.
That's it. I mean, that's it, man.
And so flag breakouts, obviously you use those for swings and day trades, I take it? I mean, they're just as well, probably.
Well, flags, or a lot of times with my swings, I'm looking for longer term trend line breaks. I mean, if you've got a stock that's been trending down for a really long time, and then it found its base and it's been going, it's built a base at that low for quite some time, and then you're coming up to that trend line, volume starting to pick up. I mean, those are ones that I really like to especially if it breaks that trend line and gets over all its moving averages, and then it'll come back, maybe test that trend line, and then bounce off of there. I mean, those can be unbelievable swings because it's the start of a new trend. I mean, the thing has been going down forever, and then all of a sudden it takes out that trend line, builds a base above it. That could be the beginning of a brand new trend. That's a great time to get it for a swing.
Gotcha. Any examples of that? I also, in my IRA, I typically, in my IRA and swing trade accounts, a good chunk of my trades that I do for swings tend to be base breakouts because I do find they have the most potential, but they require the least amount of maintenance for me because I'm day trading and running the business and the chat room and stuff like that. Because you have that big long base that could be going for 6 months, a year, whatever. You're kind of setting your stop and letting this thing do what it's got to do. Where sometimes if you try to swing trade a stock that's breaking out to say all-time highs or something like that, it requires you to manage it and watch it a little bit more, which I don't have the time to. Like in my Think or Swim where I swing trade, I buy, set my stop, and I don't want to open that thing up every day. It's like once it's kind of getting near my target levels, I'll have an alert set, and that's it. Then I come in and sell some. I don't want to monitor it all the time.
All right, so let me show you. Let me pull this, move you over here, and I'll show you one that I still have a swing in this stock, and this is really, you're going to trip out when you see this thing. It's really thin, but I'll show you what I was looking at. And let me share the screen. Okay, this is really thin. This is an Israeli company. And this is when DGLY and all these other security companies were going crazy.
Yep.
And I came across this mags, and this is the weekly chart, right? So look at this long-term trend line that I've got drawn here. And then look at how this stock was basing within this area for so long, right? So it had this nice base, and it was over all these moving averages. It had this. So here was a flag, right? Here was the pole right here, flagged out, and then bam, it exploded. Let's take it to the daily. So, all the moving averages were sloping up. The stochastics had crossed to the upside. Volume was starting to pick up. So this is one that I actually took for a swing after they announced a brand new robotic perimeter freaking system that they have in the heat of that whole DGLY stuff. So took this for a swing, and took it for a day trade. I mean, you can see the move it made. It went from $4 to $6. And now actually I still have half of my swing position, and it's just pulled back to the 20-day moving average. So I'm actually looking for this one. It's almost filled the gap. I'm looking for this one to potentially break out again.
I like that. I like that move. I agree.
So that's that.
Cool, cool, cool. Hey, let me ask you this, and then we're gonna, answer some questions from these good folks. Slumps. I'm sure you've been at a couple since you've gone full time or before you were going full time. How do you get out of these slumps? How do you dig yourself? Because I believe what will mark the student that actually turns into not even a pro trader, but just a profitable trader is how they handle when the shit hits the fan. Because I make sure I really hammer this in class with everybody. I say there's going to be a point, and it happens to everybody, where everything goes wrong that you think could go wrong, where you're totally confused, your trades are going wrong. If you're on the simulator, in class, now we didn't have it when you were a student, but now we put all the students on simulators, the trading simulators, so they can practice the flag patterns and all that. But when everything is going wrong, you're going to want to quit. You're going to think you can't do it. You're not good enough. You're not smart enough. Oh, well, this is not going right. All the excuses come out. This is not going right for me. I don't have enough time with my family. Whatever it is, all of these things are going to come out. You're going to hate me too. You're going to hate your professor too. He didn't prepare me for all this. All this shit's going to happen. But what marks whether you're going to make it or not is how you handle that first shit hits the wall, scenario. Because a lot of people fold and they don't come back, and other people, they learn from it and then they pick themselves up and they say, okay, I got to get some help. I got to talk to some people. I got to refocus, and then I got to keep grinding. The grind is where you make your money. You got to go back on the grind, but a lot of people just give up. So how do you handle that first slump?
So when I think one of the key things, and look, man, I'm going to be 100% honest with you. When I first started, and I was in your chat room, like I said earlier, and I was trying to follow you or Sazman or even Mary, anybody into a trade. I'd be up and then I'd turn around and give it all back, and it'd be like you guys would sell out and make money, and I would hold on to the thing and wind up having to take a loss. And I mean, it was like brutal. There were times where every single day it seemed like you guys were killing it and I was getting killed. So, and one of the things that I did or tried to do was, so I stopped chat rooms. I stopped trying to follow people. I was like, all right, look, man, I got to find my own setups. I can't be just following people. I've got to try and see what they see, find my own setups, play my own trades. And, I focused on that for a long time. And even that was hit and miss for a while. I mean, like I said, I'd go on a hot streak, and then all of a sudden, it's like everything you were doing that was so perfect and so right, all of a sudden is not working. So you have to adjust to the market. And then, what I've learned, I think the biggest thing that I've learned is sometimes the best trade that you take is no trade at all. I mean, there will be days where I will sit and watch and sit on my hands and not trade anything. I mean, if I'm in a slump, or if I'm not feeling it, if I'm feeling out of sync, I mean, there's days literally where I feel like I'm in the Matrix. I mean, because I see everything. Everything is, I'm in, I'm out, I'm making money here, I'm making money here. I got 5 trades going at one time, and they're all banging, and I'm like, oh my, I'm in the Matrix. And then there's days where I got 5 trades going, and none of them are doing anything. They're just, some of them you can sit and watch all day. They'll just sit there and flatline, So I mean, it's bad connection here, way bad.
Yours?
No, I'm seeing somebody else's.
Oh, most of the time that's on their computers. I mean, sometimes it won't be, but most of the time it will be. I wouldn't worry about too much.
But look, you got to be mentally tough, man. It's like anything else in life. I mean, life is a challenge, right? So you're either up for the challenge. I mean, here's the thing. Look, if you really don't have a passion for stocks, if you don't have a passion for looking at thousands of charts, if you don't have a passion for looking at, if you want to be a swing trader or investor, if you don't have a passion to read the fundamentals or look at a balance sheet, you're never going to make it. I mean, you've got to be you've got to love it, man. And I mean, look, you may want to quit, but if you really, really love it, I mean, if you have you're going to find a way to get through it. I mean, it's like breathing. You got to love it as much as you love breathing, right? And if you're not,
the why is huge. The why is more important than the how. There's a lot of different styles where you can make money trading. You can do my style or this guy's style. There's, the key is to learn a method and have really good risk management and then make it your own. But there's a million different ways to make money trading. The how is not that as important as the why. Like, why are you getting into this? How can you work harder than is humanly possible? How can you work longer than you think is humanly possible? How can you push yourself, when you just don't have the juice left? It's hard. It's hard. This is my, some days I do 3 webinars. I trade all day. I'm on video. And then I got to do my blogs. I got a business to run. I got 2 businesses to run with 18 employees. I got to check in with everybody. Sometimes it might be at midnight. All of that stuff, though, I mean, you got to keep going. But your why is like, I always keep pictures of like my family, things I want to do right by my computer. So it's like when you're tired, you know why you're doing it. Like, why would anybody my age want to be doing this? It's like I've already made a bunch of money. I could be relaxing a little bit, but you love it. It's what you do.
Right. I mean, you absolutely have to love it. I mean, I get a lot of people hitting me up saying, "Hey, I want to do this for a living," but I don't think I mean, look, man, if you think you're going to trade stocks and work less than you do working for somebody else, you're in for a rude awakening. I mean, you're going to trade 8 hours throughout the day, but then there's the 2 hours of prep time before the market opens, and then there's the 2 hours of prep time after the market closes, and then on the weekends, that's when you're going to do all your heavy lifting. You're going to do all your research. You're going to go through your big scans. I mean, this requires so much more time, and if you don't love it, I mean, it's like, being at any other job that you hate. I mean, if you're working, a Burger King flipping burgers and you hate your job, it's going to be the same thing with stocks. I mean, if you don't have the passion, there's no way you're going to be successful. There's just no way.
That's a wrap. I mean, that's how it goes. Let's answer some questions, Tim, and get these guys some answers here. So,
Okay.
Jordan would like to know, and I think you went over this briefly, what should I be looking to do in terms of screeners?
In terms of screeners.
So that's like your scanning capabilities, essentially.
So, one of the things, I have a bunch of different screeners. I have oversold, overbought screeners. I have greater than 4% is probably one I use the most. And then I've got my, like I showed earlier, my trade ideas that are screening all day long for stocks that are on the move under $20, moving up real fast. And then there's the 3-day breakouts with high relative volume. I mean, volume is key for me. And then I've got my go-to list, which, I think has actually about 2,000 stocks on there. And I've gotten to know those stocks fairly well because I'm constantly looking at them. So anytime I see one of them, pop in pre-market or rising up in the percentage move on the chart throughout the day, I'm all over it. I mean, I get a lot of people asking me how I watch so many stocks at once. I mean, like I said, I've got on the one screen, I've got 6 charts with 6 different stocks in it that I'm watching in the 5-minute, and then I've got, the TC 2000 up here, and then I've got all my screeners running during the day, and I've got stock tweets and Twitter going. So, if I see Canal say something about a stock and I pull it up and it looks good to me, I'm in.
How many monitors you got going over there?
I got 2. I got a 26-inch and I got a 45-inch.
Whoa, 45-incher. So that's a TV?
Yeah.
That's awesome. When I have students over, I got like a 70-inch Samsung, so I wire in the TC 2000 on there, and it's like da da da.
Oh,
We always
awesome.
have students over. We have always every week I have people come to the house. People call me up and say, "Hey, I want to come to Florida and hang out." It's like, what are you gonna do? All right, cool, come over. So last week we had Pastor Blake. I don't know if you're in our chat. You seen him in the chat room. Pastor Blake is he's a young pastor. He's in his late 20s. He just got married. But he wants to make money because he wants to do charitable things and stuff like that. He's actually a pretty good trader. He trades inside ClickFund, our hedge fund, and he's decent. I think he's getting better. So he came with his brother who took our boot camp, and then their friend Titus, who's a swing trader, and they hung out for like 7 days, and we had a blast. But I always use the big TV to kind of go through charts at night, so that it's awesome.
Yeah, it is awesome, man. When I do my big scans on the weekend. That's what I do. It's on the 45-inch screen, and it makes it so quick when you're going through all just flipping through the charts. I mean, because you see it, like it's like as big as day. You're in the darn chart. So I love it, man.
Tim, how do you file your tax returns? Are you trader, investor, LLC, corporation? What do you got going on?
I'm no LLC, no corporation, nothing. I just trade, and then I take.
People. I think I have my trades go through the Bulls on Wall Street LLC just because of all our different businesses. So I have one essentially umbrella corporation, and then we have like 6 different businesses. Or I got my business partner Tim, my best friend from childhood. So Tim, like my 4 best friends are my business partners along with Mary Beth. I've known them since 6th grade, and so they always got me. They run the day-to-day parts of the business with Mary Beth, and they always got me in all God knows how many businesses sometimes. But we have an umbrella corporation. Then I have one essentially for Bulls on Wall Street and my trading. It gets routed through there. But people really focus in so much on the taxes. But the thing is, you can make all these shells and different things. And in the end, you're going to still pay the same thing. If you deduct something here, you just pay it back here. It usually just evens out. That's what I've noticed. I spend $4,500 a month on accountants. And the one thing I learned is whatever I'm paying these accountants, they don't save me enough to count for all this stuff. And so now this past couple years, I made a decision to say, you know what? I don't care about writing stuff off because I go and spend some money. I'm spending some money. And if I want to make more money, I'm going to make more trades or I'm going to make more better business decisions. I live in America, baby. I'm going to pay my taxes, and who gives a shit? I'll work more. My taxes go up. I will make 10% more trades. Big deal. The more complicated you make your taxes, it just becomes a headache. It becomes a headache, and there's a price to pay to live in this country. And yeah, probably our taxes are too high, but what are we going to do about it? Till somebody runs for office and changes it, it doesn't mean anything. Tim, so Gabriel wants to know, how should one play this choppy market? Do setups get better, and if so, are movements more volatile? So I'll add into this that I don't actually feel that the market's been choppy, at least not for what I do. The market's been awesome for this whole year. The market's been pretty awesome this whole year.
Look, there is a choppy. There are weeks where it's choppy. The latter part of last week seemed a little choppy to me. You know, look, man, this is the most hated bull market in the history of bull markets. I mean, everybody and their brother wants a pullback. I mean, we're trading it near all-time highs, but reality is, I don't see a whole lot out there that suggests that we're going to head into a recession. And there's really only a few things that take down a market, and that's one is a recession, which I don't see being on the horizon. And when it gets choppy like that, like the latter part of last week, I tend to just not take as many trades. Like I said, it's all about staying in the game. It's not about trying to force a trade. It's about being here, next week or tomorrow. And if you don't have to trade every. That's the beauty of this business. Actually, is you don't have to. You can walk away. You can. And if you want to trade, you just scale back your positions. Instead of taking 500 shares, take 100 shares. That's how I get through choppy markets, and that's how I get through slumps. Is I'll scale back my position until I feel like I'm back in my game. I won't take as large of a position. Instead of taking 1,000 shares or 2,000 shares, I'm taking 300 shares. That's how I get through it.
That is great advice, guys. So if your results aren't where they are, if the market conditions aren't perfect, the best way to limit your risk, cut down your position size and your frequency, and you've taken a good chunk, a majority of the risk off the table, and if some plays work out, great, you'll make some money. And if the choppy conditions persist, your losses are now minuscule because you've totally cut down on your risk there. Paolo wants to know, what broker do you use, Tim?
I use IB and Scottrade.
IB and Scottrade.
Yeah,
Paolo, I trade through ClickFund, and that's about it for day trading anymore. At least for what I do, I can't use Ameritrade or E-Trade. You can use IB for day trading. They don't sell off their flow, but Ameritrade, E-Trade, Schwab, they all sell off their order flow to HFTs and hedge funds. And so essentially what that means, you can Google it. Ameritrade has been, they've been known for this. So what they do and why the fills are always so slow. So say, and this is why, we have Chaim. Chaim Bodek is like the preeminent guru for HFTs that works for me in our hedge fund. He builds all the routing and the technology so that we can move quicker. And so what happens, like say you're at Ameritrade. Ameritrade sells off their flow. So you're looking at a stock and you hit buy. There's always a millisecond delay. There's a millisecond delay. And your order can go through all these different places. But what you don't know is that there's 15 different hands on that order flow from your broker. It's not like you just hit your broker's the end game and then your trade gets filled. For a trade to get filled, it goes through hand to hand to hand to hand before it actually happens. So Ameritrade, E-Trade, they will delay your fill for a second. And what they do is they let the HFTs, they let off the hedge funds, they let them take a sneak peek at your order. And then they decide whether that's good flow, bad flow, toxic flow. And then they'll either take the other side of the trade or they manipulate it in some manner. And, IB is the only retail broker I've seen that does not sell off their flow. But, you can go and Google it, Ameritrade payment for order flow, and you'll literally see, and you'll lose 2-3 cents on average for every trade, which doesn't seem like a lot, but like for me, I do about 1 to 2 million shares in volume a month. So, if you lose 2-3 cents per share and you do 2 million shares, that adds up to a lot of money. A lot of people have asked Tim, what do you do better, swing trading or day trading?
I definitely a better swing trader. I mean, I do well with day trading, but swing trading is more in my wheelhouse. There's no doubt about it. I'm more comfortable swing trading because I do a lot of due diligence on the company. So it's a matter of matching up the fundamentals with the technicals, and when you get those two together, it can be really, really powerful. Like I said, when you find one of those stocks that is just break or turning from its long-term trend, breaking that trend into a new trend heading up. I mean, they can be huge, huge winners, man. Another one that I like right now is FCX. It's
Yeah, I know
you know,
that one.
huh?
I know that one.
That's the I've had it in my videos last couple of weeks. That it's one that I think is a no-brainer. I mean, yeah, copper and a lot of the commodity plays have gotten smashed, but FCX is huge, man. They're not just copper, they're gold, they're oil and gas. I mean, they're a big, big player, and that to me is one that I'm comfortable owning for the next 3 years. So that is definitely one that I would put on my radar. And Taser is another one that I started swinging it at 16 bucks. It's at 18 now. If you look at the daily, it's putting in a nice flag, and I think it's going higher. So
Ah.
definitely better at the swings.
Hey, Tim, a couple of people have asked, on any given moment, how many trades do you have going at one time?
Uh, well, it varies. It depends on what kind of day we're having. I mean, if it's a good positive, energy positive day in the markets, like I could have three or four, even five trades going at the same time. Um, and then if it's like if it's a Fed day like tomorrow, I'll probably have one trade going at a time. It depends.
So for me, I have hard statistics. I'm all over the place as it is. I mean, when I'm on, I mean, I just don't miss. Like it, and when I'm on, I'm on. Like nobody gets hotter. But I do notice that anytime I have more than 3 day trades going at once, things really can fall apart really, really fast.
Yeah.
Because I can't manage them all, but also I forget. Like, because you're watching these two, and then the other two start dropping. We trade a lot of momentum. But the other thing is you're so levered at that point. Say you got 4 longs or 5 longs, and you're day trading, and they're all momentum stocks, and the market creaks down a little bit. Well, if each one drops 10, 20 cents really quick, and you got 5,000, 5,000, 5,000, 5,000, you just blew 2,500 bucks in one candle. And that's what happens. That's what has happened to me in the past is that, I've made all this profit. I'm doing really good. And then I keep pushing it. Now I have more and more position, more and more size. And then because you're so levered up at that point with so many positions, a little downtick in the market and boom, everything drops just a little bit. But because you have so much size and so many positions, you can just lose thousands of bucks in a
Well,
second.
so yeah, and I 100% agree with you. So I should probably clarify that if I've got 4 or 5 positions going, and it really depends on the setup. It depends on the stock, and it depends on how comfortable I am with the trade. What my risk reward setup is. I mean, in my favorite stock, or the one I think's got the most juice, I'm probably going to have 2,000 shares, and then there may be another one that I want to be in, but I'm not so sure about it, the setup, and I'll take 200 shares. I mean, so that my exposure isn't so dramatic. I kind of limit it on certain stocks. If I don't feel real comfortable with the setup, or I'm not real sure, I mean, I may only take 200 or 300 shares. I mean, some of these stocks, if you only have 200 shares and the thing goes up, 50 cents. I mean, that's if you could make 50 cents on 200 shares, man, that's 50 cents on 200 shares.
No,
But
totally.
same in the same regard. I mean, it could drop 50 cents too. But I'm pretty. I mean, I'm real comfortable. I would say, you're probably right. When you get up into the 4 or 5 trades at a time, it gets a little hectic. But usually I like to have at least 1 or 2 going for sure.
What about if you're new? Because I notice with new people, you can't process as much information. I had a couple people inside ClickFund complain. They said, well, we can't get into all the winners because I limit everybody's positions to 2 or 3 in the beginning, not forever, but that first month or so they get their feet wet and they're not overwhelmed. Because otherwise they'll have 10 things going. They're trying to jumping around trying to find their big winner. But I believe, because I've seen it, that if you're brand new and you're trading your first live account, if you have more than 3, I mean, things are going to fall apart. I've had a lot of people complain about that. I don't know if they're complaining because what they're saying is right, or it's just, they want to jump around, essentially. They feel limited. And it's like, well, think about how small your account size is. These are going to be people that start off with a $2,500 or $5,000. Why would you want 4 positions? I mean, that just sounds crazy to me.
Right.
What do you think with a new person? Should you focus on 1 or 2 positions and 1 or 2 setups, or what do you do?
I think if you're a new person, you focus on 1 or 2 trades. I focused on 1 trade. For the longest time, it would be 1 trade. I mean, now I'm at this area where I can do 3 or 4 trades at a time. But I would, as a beginner, focus on 1 trade, find a particular setup that you like to play, and try to master that setup.
Yes.
That's what I would do. And then once you master that setup, I mean, those setups, and I think that's why I'm able to go to 2 or 3 different types of trades. I mean, once you have a trade mastered or a setup mastered, it's really easy to recognize them, and it's really easy to just react to it. It's like I almost am to the point where it's just like instinctive now. It's just like I know it's gonna go. I mean, I know. I'm saying if this sucker's gonna go, this sucker's gonna go, and I'm in it because I know it's gonna go. And then there are other setups like bounces off the VWAP and bounce plays. I really suck at the bounce plays. I don't know why I suck at them so bad, but intraday bounce plays, I suck at them, and it's one that I'm trying, because the market's going up. The stock had a nice pop. I mean, the volume pulled back. It was light. It comes down to the VWAP, and I try to catch that bounce off the VWAP, and it'll sit there for a minute and then just fall right through it, and really pisses me off. But you gotta find that one setup that you can play just instinctively, because that can make your day. I mean, that can make your day.
Everybody's got to have an Old Faithful, your go-to setup. Me and Mary Beth, when we talk about, we call it our ride or die girl. Everybody's got to have a ride or die girl, where no matter what, you can depend on this setup. You've taken it so many times, you know it like the back of your hand. You know how to find it, meaning you have very specific scans or methodology so that you can find this opportunity numerous times. And then you know everything about it, the details of when to trade it, what time of day to trade it, what type of size to put into it, what type of markets this trade works well versus sometimes it doesn't work well. So all those microscopic details, they add up into what is complete mastery over that setup. And if you have one, the master of one, you can eke out profits and build upon it. But if you're a generalist in trading, meaning you go chat room to chat room, guru to guru, setup to setup, chart to chart, indicator to indicator, scan to scan. You read this book, this thing, that thing, and you've just got this hodgepodge, melting pot of information. Most likely, it's going to take you a while to build upon it and build profits, because that's not what trading is. Trading is about having a very specific methodology that is dependent on risk management, but most importantly, you've got to have complete mastery over one or two things, and that is your go-to setup. Develop it, monitor it, get data on it. See, the reason that people always ask me, like, why are you so confident? Sometimes you don't even, like, flinch on these things. Well, part of it is I just been doing it a long time, but the reason I'm so confident is that if I call out XYZ setup in the chat room, and I say, all right, we're buying SCOC. So today, like, SCOC popped up at the open, then it pulled back. I'm saying, hey, guys, we're adding SCOC at $6.96 and $7, and it shoots up to almost $8 in 20 minutes. So somebody says, well, how do you know that? How'd you feel so confident it wasn't going to just break below the lows? I say, well, because I've taken this trade now 2,452 times, and when I do it that way, I won 85% of the time. So the confidence doesn't come from my hunch. The confidence actually comes from I have hard data backing up what I'm doing, but I have complete mastery over that setup. That's my go-to setup. And everybody's got a slump. So if I'm a little bit off my game, I've got to break through this. I got to break through this and get a win streak going, get my mojo back. What I do is I chill. I chill and I stalk a certain type of stock. And I wait for my go-to setup, my old faithful, to show up, because I know that when she does, I'm gonna play it right, because I have so much experience with that stock, and I have the data that I trade that stock well. It fits my personality, and that's huge. You got to find stocks and setups that fit your personality. That's really, really important, because that also adds probability to it. There are a lot of easier setups than some of the stuff that I trade, but it doesn't fit my personality, so I don't trade them that well. I'm an action junkie. I have a very specific personality, and so I have to trade a specific way. And so my probability on those trades is higher. So, find yourself a go-to. Tim, just a couple more questions. A couple of people are asking, this is a good question. Patricia is asking, what do you do if none of the stocks that you prepared for in your watch list are working that day?
Well, I mean, that happens actually a lot. Like I said, I like to watch them for the first 15 minutes or so, but I'm also keeping an eye on my scanners, my trade ideas, and if there's something else. My fingers are never stopping. My fingers never stop. I'm constantly pulling up charts on TC2000, either stocks that are moving on trade ideas or stocks that are moving on my go-to list. If the initial 5 or 6 stocks that I have aren't working, then I'll blow them out, and I'll put something else up and start watching that and looking for a setup. I'm not glued to those 5. I think that those 5 they have the best potential, and those are the ones that I really want to watch for a setup. I have a lot of patience. I think, Kunal, you know this. I mean, I have a lot of patience to wait things.
Yeah.
To wait for things to develop. And once they develop, I'm there. I mean, I'm on it. I'll watch a stock all day long. It's if I think it's gonna go, if I think it's really close to going, I'm gonna watch it. As long as it doesn't, violate to the downside, it still has a chance to go. So I'm gonna continue to watch it, and if it starts to go, I'm on it.
Cool. A couple people are asking, Bob wants to know, what kind of risk should I take on a $2,500 account? So, Bob, I would say risk is always dependent on 3 things for you. Number 1 is your skill level. Less skill level, She got to take less risk. So like I could give Mary Beth a $1,000 account and give her 20 to 1 leverage, in our hedge fund or something like that. And she'd be able to whip it around and make money because she's got extreme skill. A newer person's not going to have that skill. So you have to trade smaller with no leverage, less leverage. But then also the risk you take is going to be dependent on how far your stop loss is from your buy and then the probability of the setup. So those are the two things that you always got to measure. Your best setups, you can have more size, and the less risk you can have more size. If you have a lot of risk and your probability is low, then you need to have really small size. So there's never a static answer, but you always want to be doing those couple things. Patricia, in terms of your thing about what if nothing on your watch list is going, I always ask Paul that. Paul does our swing trade service. He says, I sit around. I wait. I build watch lists. I build watch lists and I wait for entries. Or you play stocks in play. Every day there are stocks that come out with earnings, PRs, things like that. And those are amazing stocks. At least day trade, you may have to wait to get a swing trade entry. But every day there's going to be something. Like I do a watch list tonight and nothing pops the next day. Totally fine, because in the morning I'm going to scan for gappers, earnings, PRs, and I'll play those, if my watch list is not going. A bunch of people have asked, do you ever hold stocks into earnings, Tim, on your swings?
I can't say I don't. I mean, I know that there's a lot of people that don't like to hold into earnings, but if you've done your due diligence, or I'll give you a good example. So MGM had a good earnings report after 5 years of bad earnings, and their second earnings report was coming up. Now you have to understand, I live in Vegas. MGM owns 70% of the Strip, so I have kind of like an inside scoop as to how the casinos are doing and how Vegas is doing, and we're doing really well. So they got the debacle of the city center behind them, and so when the stock was sitting around $16 and change, that was 5-year resistance going back 5 years. It would go up and tap 1680 and fall, 1680 and fall, and I knew that if they had another good earnings report, it was going to take 1680 out with conviction, which is exactly what it did when they reported good earnings. So, yeah, I mean, if I've done my homework, and I'm going to go back to it again, and that's why I say if you're going to swing or hold a stock for a long-term investment, or even take it for a swing, I think you have to really intimately know the company, the stock, and have a good feel for the fundamentals. And then, I'll tell you this. It's been my experience from being an investor for so many years that even if they have a good earnings report, a lot of times you get the head fake. They have a good earnings report and the stock will go down. But that's because if you look at the stock, it already ran in anticipation of a good earnings report.
Yeah,
so,
it's the breakaway gap. I see it all the time. We were just playing that stock. We were just playing a stock the other day. It broke out the 52-week highs off the good earnings, but it had been up 10 days in a row. So it's like, we were shorting it, but then once it comes back and fills the gap, you'll start to see it, start going back up.
Right.
You just got to play it a little bit different. You got to take in the whole picture into account.
Like a lot of times, if I see a stock, like if I'm taking a trade in a stock, you'll see a lot of the smaller company, a lot of the smaller stocks, when they have earnings coming up, you'll see their stock like running end of day, like into the close, and earnings are after the close. Those always make me really nervous. I usually get out of those before earnings hit, because what they do is they bump the stock, making you think, oh man, earnings must be great, and they come out and they're terrible, right? So you bought into that surge into the close, and only to find out that it's terrible earnings and things going to gap down like $1 the next day.
Jason wants to know, are you financially doing better now than you were in your previous occupation?
No, Jason, actually, I'm getting ready to move out of my house. It's foreclosing. We just got a nice cardboard box, and me, Buddy, and Ava are going to go live on the street, see how it goes. I'm just kidding. Yeah, I would just say this. I do well. I'm happy. I'm content. More importantly, though, I love my life. I mean, I love being a day trader. I love getting up in the morning and coming into my office and hanging out with my dog all day, and getting done trading and going and working out. And I love my life.
It's the money is, the money will come once you get a little experience and good, but the lifestyle is just sometimes better for some people. When I had a job, I was I was running a recruiting firm. I was 25 years old. I was making 150 grand a year, and I was living with my parents. I'm Indian. You got to live with your parents your whole life. So I'm hanging out. My mom's in the background cleaning my room. I mean, I'm at my parents' house right now. I left Florida for a couple weeks. She's making me food all day, and I was making so much money as a young man, but the lifestyle sucked. I mean, I was in a cubicle. I was definitely, being the youngest person in the office, I was working 80 hours a week, and, I was living in Michigan, driving in the snow for hour commute every day, all that type of stuff. The lifestyle sucked. Now it's like, even I make a lot more money than that, but even if I didn't, if I was making 100 grand a year, but I'm living on the beach and I have no commute, for me that's just it suits what I like to do in terms of my lifestyle, which is my day consists of trading, going to the gym, teaching class, playing beach. There's not else I really. So a lot of it is lifestyle too that fits you. I have total ADD, so I can't sit in traffic. Like, I can't sit in traffic because I always bump into people because I don't pay attention. So I can never work again in a real job or have a commute. Jason, somebody asked, what are top two things you learned from the boot camp?
Top two things, I actually put them in multiple time frames. Definitely was a big one for me. Once you nail down multiple time frames, I think it really helps a lot with your assessment of stocks, and just setups in general. Technical setups, were huge for me, man. I mean, you went over a boatload of them.
I always give too many. I always wonder if I'm giving too many, but those are the ones I trade.
No, I mean, look, they're all there, and as the market dynamics change, there's
you need them.
There's different setups that work,
It's weird too, because when I was doing research on our class, on building my class, I went through everybody that has trading classes on the internet, and they're all like 3 days, 4 days, 8 hours, 10 hours, DVD, streaming. And I'm sitting there thinking, like, how could anybody learn how to trade from watching 6 hours of video or a weekend seminar or a 4-day thing? I mean, building a trader is no different than building skill as a doctor or a lawyer or whatever, and building an Olympic athlete. There requires coursework and practice, an elite coach, elite preparation, mental and physical work done on your brain and your method. There's so much that goes into it. You need proper feedback. It's a 360 degree immersion before you can really pick it up. So there is no such thing as I'm going to take this 2-day thing or 10-hour thing and learn. Like, I just don't think it can happen. So I try to pack it in with so much information. That's why the damn thing goes for 60 days. So it's like I packed almost too much, but I don't see how anybody can learn in any different way because this is so hard as it is.
Yeah, I agree.
So I believe that's it. You guys have any other questions? Did I miss anything? I don't watch any Bollywood movies, actually. They're too damn long. I don't watch any TV in general. I love TV, but I'm like one of those people, once I start doing something, I could sit there for 12 hours and just not move. So I choose not to watch too much TV. Somebody says, I'm surprised Tim answered the question about holding the trades into earnings. I would have pleaded the fifth.
Look, look.
If it works, it works. Yeah, you got to do what works for you. If it works,
right. Yeah, I mean, look, there are some times that I'll hold. Look, there's sometimes I'll hold biotechs overnight. Which is panic. But I won't hold it into an event. I mean, it really depends on the stock. It depends on how well I know the company. If I'm going to hold into earnings, if it's just a little company, I probably won't. Even though a lot of times those can be the ones that really pop the most after a good earnings report.
Cool. So just a couple questions from people, guys, and then we'll lock this up. So in terms of our boot camp, a bunch of people asked about that. So our boot camp goes one way. First month is coursework, 4 days a week, 8 p.m., about 2 hours a night. Okay, so it's Sunday, Tuesday, Wednesday, Thursday. That first month, I teach you everything that I know about trading. Each class is recorded, archived, so you can go back. Each week you'll be given homework, quizzes, there'll be group projects and things like that that you have to do, okay? The second month, after all of that is done, we put our students on a trading simulator. So all of them put together a business plan like you were going to go walk into a business and apply for a loan. What's your plan for trading? Okay, you put in the business plan, we put you on a simulator. Now you practice everything you learned in class. We also give you a password to the chat room so that you can watch me on video so you see how I trade during the day and you see my routines and stuff like that, so you kind of get a feel for the action. During that time, you're going to be fine-tuning your techniques. You may be on the simulator for 3-4 weeks. You could be on the simulator for 3-4 months, depending on how much time you have to devote to it and how quickly you pick up on things. We have a website that we use where you can post the trade from the simulator to the community, and they'll be in chart format. So people can make comments on them, and we go through them every night before I go to bed. I start going through the trades to see if anybody did anything interesting, anybody made good trades, bad trades, and the other people in the community will comment on them and give you pointers. And that is huge because now you're fine-tuning your technique. If you keep doing a certain thing over and over, when you post those trades, everybody's going to comment on them. You can have a discussion on them, and now you can fine-tune that so you don't do it again. And also that website tracks all the data of how you trade certain setups, how you trade in the morning, afternoon, market up versus down, all of that type of stuff. So you got the hard data. After your simulator time is over, then you're eligible to trade inside our hedge fund. So our hedge fund that we trade at is called Click Fund. Click Fund is a hedge fund. We've got now 200 traders in it. We allocate capital to people. We give them a shot. So if you really want to make money trading, you need to get to have a $40,000, $50,000, $100,000 account. So what we do is we allocate small amounts of capital to everybody, and then as they're profitable, every 2 weeks we have the risk managers come in and take a look at their metrics. Okay, this person's profitable. Let's add some capital. Let's add some additional risk and let them trade more size. And so Now what's going to happen is over time, every couple weeks, you're building yourself up into a bigger trader. So like somebody like, Mary Beth may trade $500,000. Somebody like Harsh will be trading, because he's been trading a little bit less. He'll be trading $100,000, $200,000. All these different sizes of people. So as you get more and more better, you get more and more cash to trade with, so you can make more profits essentially. Now, what happens is, I'll take a split of the profit. So the more capital you need, if you need 100 grand, I'm going to take 20% of the profits. If you need 30, 40 grand, I'll take 10% of the profits. But you have a vested partner in all this too. But the main thing is you get amazing technology, but you get capital that's hard to find when you're new. So that's kind of, and that class starts, boot camp starts, September 28th. So if you guys got any questions, I'll put my email in there, and I'll make sure to get back to you in a timely manner. Tim, do you got anything to say for our
there was Winston actually brought up a real good point, and we kind of went over it about how he does better trading paper trading than when he's got real money on the line.
Everybody.
That is very, 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 very common. I think everybody experiences that. One of the things that I'm doing on my blog is I've been putting together a workbook on my blog, and one of the things that I talk about is, professional traders, they're cool as cucumbers, man. I mean, there is no emotion. They know their plan. They know when they're going to exit. If they lose money, they're cool. If they make money, they're cool. They're not celebrating, high-fiving if they're making a bunch of money, and they're not, ready to go hang themselves if they lost a bunch of money. They have a plan. They try not to get emotional about their trade. When you put real money in play, it's natural. People's emotions kind of take over because, you're watching your money disappear, or you're watching your money grow. That's part of the game. It's easy to be a rock star paper trader because you have nothing at risk. When you've got something at risk, it messes with you emotionally, but you have to get to a point where it's all business. I mean, just like anything in life, man, it's business, right? When you're going to have losses, you're going to have profits. The goal is to end the week with more profits than losses. That's the deal. You treat it like any other business.
There's a huge disconnect. We have Dr. Menaker now help out in the boot camp. So Dr. Menaker is a trading psychologist. Winston, go through the videos in the boot camp section. Winston's one of our students. Dr. Menaker has a specific webinar that he did called Transitioning from Simulator to Trading Live. And the big disconnect comes from when you're trading live, okay, when you're trading real money, no longer are you trading stocks at times. You are trading your hopes, your dreams, your expectations. See, you take a class, you study, you're on simulator, okay? You've practiced and put in hard work, and we're always taught, right? You work hard, good things will come to you, and you have all these dreams and things that you want to do for yourself. You have family you want to take care of. That's what always gets me. Being an Indian person, man, I got parents that are just, I haven't seen these guys move in a decade. It's like I got a lot of people I got to take care of. It's always on the back of my mind. So you're trading your hopes, your dreams, your expectations. Very little of the time you're actually trading stocks, and so that gets in the way from you actually trading setups. You're trading now this thing that's always going to be hanging out, which is your own hopes, and that's a tricky thing. Anybody else got any other questions? Tom, A boot camp class is, a boot camp class. So everything is recorded. We have like a Google community that's a private community where people are in there posting all day and all night. So you could chit chat with all the other students. You can retake the boot camp. So guys, like Tim took our boot camp 9 times. So Tom, this is a lifetime journey. So you watch the recordings, you do everything you can, and then you know what? When you have a little bit more free time, the next boot camp, you may say, oh, you know what? I got some time on Tuesday. I'm going to pop in class and say hi. So once you're in the family, you're in the family, and so retake the class. But the key is to start immersing yourself in this because it is a long process. Now, no matter what anybody tells you, you can't learn this over a week or a seminar. It's impossible. I've studied not just trading, but I sat there the last couple years and been really, really studying how people learn. How do you develop skills in people? And there's no other way to do it other than a full immersion beyond just, hey, watch this video and then that's it. There has to be coursework and practice and feedback and an involved coach and team and community around you. And if you can get all that, then you have a chance. Even then, it doesn't mean you're going to be a success, but it means you got a chance, and that's all you can do. So, Dr. Tim, thank you for doing this, man. I really, really appreciate it. I'm excited to see you in a couple weeks. Actually, maybe even 10 days now.
Yeah, man, I'm pumped. We're going to have a good time.
All right, cool, man. Well, thank you. I appreciate it. Hey, guys, email me or Tim if you need anything. I appreciate you guys letting us ramble on for 2 hours. I will see everybody else in the chat room tomorrow or on Twitter. And Mr. Tim, I'll see you tomorrow, too. Take care.
All right, bro.
Peace.
Take care, everybody.